Hello, class 9. Welcome back to another session of Commerce class. This is your Avjit sir, and today I'll be presenting you the topic Accounting Books and Statements. Source document. What is source document? Evidence in the form of various business documents such as voucher, invoices, bills, cash memos, receipt, etc. These documents are called source documents. So whatever we purchase or sell, those transactions are kept as a proof, such as voucher, invoices, bills. These are the source of documents. Transactions are recorded in the books of accounts on the basis of these documents. So whatever purchases or sales we do daily, those are entered in the books of accounts on the basis of these evidences or source of documents. The correctness of recorded transactions can be verified with the help of these documents. So whenever we want to verify that whether we have entered correctly in the books of account, then we can check through these sources such as vouchers, invoices, bills, cash memos, receipt. So a source document is the origin of transactions and it initiates the accounting process. From the source document, a transaction is first of all recorded in the subsidiary books or books of original entry. These books are as follows. So, from the source document, the transactions are recorded in a subsidiary books. So, let's see the name of these subsidiary books or books of original entry. Number 1 is journal. Number 2 is cash memo. A cash memo can be single column, double column, 3 column and petty cash book. Number 3 is other day books. 4th is purchase book. 5th is sales book. 6th is purchase return. 7th is sales return books. So these are the subsidiary books or books of original entry. Now first is we should understand the meaning of journal. What is journal? Now the term journal has been derived from the French word jour. And what does it mean? It means a day. So journal therefore means a book of daily record. So whatever purchases and sales we do every day, that is kept as a record in the form of journal. In other words, journal is that book of accounts in which transactions are originally recorded in a chronological day-to-day order. So whatever purchase or whatever goods we are selling, all the transactions are kept or recorded in the book of accounts in a chronological order. In a chronological order means date wise. Suppose you purchase something in the month of December and then you purchase in the month of October. So first the entry will be the month of September, then it will be October. So date wise, that is known as chronological order. So what is journal? So journal is a book of account in which the daily transactions are recorded in a chronological order. Now, what are the features of journal? Journal is a book of original entry. Original entry, why? Because whatever the sources we get, that this much amount I have purchased. So there is a record, or there is an invoice, or there is a bill, and through that, when we see the bill, that is a proof, that is an evidence, and therefore when we enter that transactions in the journal, we are entering the original purchase or buying of goods by seeing the source of documents. So it is an original entry. Transactions are recorded in the journal as and when they occur. Suppose it occurred today, so today only we have to enter the transaction record in a chronological order. Journal is so ruled that all the transaction can be passed through it. So whatever transaction is taking place, it has to be passed through the journal for keeping the records. The process of recording transactions. So the way we are recording the transactions in the book of entry or journal, it is known as journalizing. The following points to be noted. Now you can see this is a format of journal, that is date, then first column is date, second column is particular, third column is LF, LF is ledger folio, fourth column is debit, and fifth column is credit. So you have to remember this column. There are 5 columns and you have to remember the headings of this 5 column, that is date, particular, ledger folio, debit and credit. So we will see how one has to maintain the record in the journal. Now in the first column, date, the date of the transaction is entered and the year is written at the top. Month is recorded on the arrow part of the first column. Now we can see in down, we can write in this format also the date, that is day, month and year. So it is written 10/4/2018, that means in the month of April. Next one you can see 19th April 2018. So it is written in chronological order, first 10 and then 19. Now in the second column, particulars, the names of the accounts involved are written. First, the account to be debited with the word DR. DR stands for debit record. So first the account to be debited with the word DR. Now we can see in the example, the names of the accounts involved is cash account. So cash account is debited, it is DR. Name of the account to be credited is written beginning with the word to. Now you can see 2 capital account. So 2 capital account means capital account is credited. In the next line, narration is written. Narration means a small reason. So it is written in the bracket. So generally we always start the narration with being. So being business started with cash. Now, why cash account is debited? Because we have started a business with cash. So that is the reason why capital account is credited, and cash account is debited. So in the next line, narration is written, and the modern practice generally nowadays, there is the word dr and to is omitted from the journal entries. So nowadays dr is not written and to is also not written. Next, in the third column, so we have understood the date first column, we have understood the second column, that is particular what to write. Now we'll go to the third column, that is LF, this is ledger folio, the number of the page. Now when we maintain a ledger book, there is on a separate book another subsidiary book, that is ledger. So we maintain that book. So this particular transaction that has taken place on say 10th of April, this will be entered in the ledger book. So when we enter the ledger book, then we have to write the number of the page in the ledger on which the account is written. So that number is to be written in the LF, that is ledger folio. So unless and until the transaction is entered in the ledger, we cannot write the LF number. So in this third column, the number of the page in the ledger on which the account is written up is entered. Now it is empty as the ledger has not been, and the transaction has not been recorded in the ledger book. Now in the fourth column, debit amount, how much amount is debited. So we generally write the first column, that is cash account debited, and then how much amount is debited. So in the fourth column, debit amount, the amount to be debited to account concerned is recorded. Similarly, in the fifth column, credit amount, the amount to be credited to the account concerned is recorded. So these are the 5 columns to be maintained in the book of journal. Okay. The total of debit and credit column must always be equal, must tally. It is not that one is more than the other. No, it has to be same. I hope this part is understood by all of you, how to maintain the journal and how to write column wise date, particular, ledger folio, debit and credit, and in particulars what to write, in date what to write, in debit and credit what to write. So all these things have to be very clear. Let's see an example of journal entry. Pass the journal entries for the following business transactions. Now April 10, 2018, Messrs. M started a business with a capital of rupees 5 lakhs. So a company, Messrs. M, started a business with capital of rupees 5 lakh when April 10th, 2018. April 19th, 2018, purchased furniture worth rupees 75,000. On April 24th, 2018, purchased goods worth rupees 1 lakh on credit, not on cash. So whenever you purchase something in credit, then it will be mentioned. But whenever you purchase something like purchase furniture worth rupees 75,000, that means it is purchased in cash because it is not mentioned as credit. So it has to be maintained credit, that means it has not been purchased in cash. On April 30th, 2018, rent paid rupees 10,000 for the month of April. May 3rd, 2018, goods sold for rupees 18,000. Now see how to enter each and every transactions in the journal. Now let's try to understand. On April 10th, 2018, Messrs. M started a business with a capital of rupees 5 lakhs. So I have written the date 10/4/2018 and I have written cash account debited to capital account. So we can, why cash account is debited? Because we can use cash to run the business. So it is an asset to the business. So when there is an increase in asset, it is debited. And capital is a fund borrowed by our business through its owner. So as the money is borrowed, so it is a liability which will be credited. Okay, so cash account is debited 5 lakhs to capital account 5 lakhs. Why? The reason you have to write, or the narration you have to write, being business started with a cash. You have to see from the question. So being business started with cash. That is the first entry. Next you see April 19, 2018, purchased furniture. So when you have purchased furniture, so furniture is an asset, so it is debited. So furniture account is debited, and when you are purchasing something, you have to give cash. So therefore the cash is credited. Okay, how much? 75,000. Reason? Being furniture purchased in cash. Then we will go to the next, that is April 24, 2018, purchased goods worth rupees 1 lakh on credit from N. So you have purchased something. So when you are purchasing something, that is an asset. So it is not mentioned what you have purchased. It is written purchase goods. So therefore you can write purchase account debited. Now it is credit from N. So you have to write the name of that person to N account credit. So how much money is purchased? 1 lakh. So you have to write in debit 1 lakh to N account, that is credit 1 lakh. The reason being goods purchased on credit. Next is you are paying the rent. How much? 10,000. So when you are paying the rent, that means you are paying in cash. So 30th April 2018, the rent account is debited and to cash account is credited. Because cash is going, so cash is credited. Why? Because you are staying or you are keeping something or goods. That means in a rented house you are keeping all those goods, so you have to give a particular money to the owner. So the money is going, so it is 10,000 is credited and rent account is debited. So being rent paid for the month of April. And last, goods sold for rupees 18,000. Now you are selling the goods. Now when you are selling the goods, what is coming to you? Cash is coming to you. So therefore what is coming is debited. So cash account is debited and to sales account is credited. Because you are selling the goods, so sales account is credited. How much money? 18,000. So what is the narration or reason? Being goods sold for cash. I hope you understood how to write the journal entry. So in the later, if we go little further, we will study the golden rules of journal entry. So I hope this much is understood by all of you, how to enter or how to write the journal. You have to read the question properly, understand it properly, and then you have to write. And do not forget to write the narration also. Hope you all have understood the lesson. We will soon meet in our next session. Till then, take care. This is Avjit sir, signing off.